There are four types of tax bases: wealth, based on savings, investments, and property; income taxes are based on salary or wages; consumption, based on product taxes; and privilege, those are the taxes based on commercial leasing, motor vehicle registration, business licenses, etc. The privilege tax is your paying of taxes in exchange for a privilege. Computing a tax. The tax equals the rate times the base. The rate is the percentage divided by the state, county, or municipal area. The base is the amount of funds generated by income, property, or spending, and the actual tax is calculated by multiplying the rate times the base. Flat grant funds distribute an equal sum of dollars to each public school pupil in the state. So if a new district or school is created in a rural area, that entity will receive flat grant funds. Poor and wealthy districts receive flat grant funds. Aid distributed without regard to the amount of money raised locally or the wealth of the local school district is called a flat grant. Every district receives a uniform amount of money per pupil or other funding units such as teachers, lunches served, etc. The flat grant is the money raised without regard to the amount raised locally. Flat grant funds, magnet, and charter. In most cases, magnet and charter schools will receive flat grant funds based upon per pupil funding. In the event a private donor or foundation chooses to give to a school, the funds should be equally distributed per pupil. The foundation school program consists of two tiers: sufficient financing for all school districts to provide a basic program of education that is rated academically acceptable and meets other applicable legal standards; and B, substantially equal access to funds to provide an enriched program. The second part is the foundation program has to provide for facilities or school buildings. It's a sample of a residential calculation. $100,000 home is the estimated property value. You want to multiply that by 0.15, or the assessment level, which is 15%. That gives us $15,000 as an assessed valuation. If you multiply that by 2, we get an estimated state equalization factor. $30,000 is the equalized assessed valuation. If we had a homeowner's exemption of $4,500, that brings our adjusted to $25,500 with an estimated tax rate of roughly 6.7%, which is 0.06704, giving us an estimated tax bill of $1,709.52. The EAV, or equalized assessed valuation, times the tax rate equals your tax bill. The rate is generally expressed in terms of dollars per $100 of equalized assessed valuation, or the same as a percentage. Therefore, on this $100,000 house, $25,500 of equalized assessed valuation times the roughly 6.5% equals $1,709.52. So the aggregate rate on the tax bill, that's the combination of county, township, school district, college, city, special districts. All of those tax rates combined equal the aggregated rate. So let's take a look at an aggregate tax rate sheet. These are the line items listed in a homeowner's tax bill. You'll see the total at the bottom percentage is 6.704% of your equalized assessed valuation. We know that the tax bill equals $1,709.52, but if you look at what the school district gets, 8.798% of that total tax bill. So the school district gets $968.49, which is a little bit over half of your tax. Here's a simple view of where our tax dollars go. School districts usually dominate the largest portion of your tax bill. In this particular example, 67% of the bill goes toward your schools. However, this number generally is between 50 and 62%. You'll see the municipality or the city or town that you live in collects about 15%, the county 10%, and then special districts and central water district make the rest. So in the context of budgeting for public schools, you want the revenues brought in by property taxes minus expenditures to equal zero or a number above that to support your educational programs.